So you've decided you want to invest in stocks. Where do you begin? More importantly, how do you choose the stocks to invest in? Choosing stocks can be frightening, but as long as you have information and tools, you can confidently pick stocks. Get information from the companies themselves, the SEC or the Bureau of Labor Statistics, or get information and tools from your stockbroker. Either way, you have several options for choosing stocks. 1. Understand how macro analysis works. Macro analysis has its basis in the large, macro, tendencies observed in the economy. Your goal is to understand how major forces are affecting the performance of the economy. Then, base your investment decisions on your findings. For example, if the economy is performing poorly, inflation and unemployment are high while national output is low, avoid overpaying for stocks and be sure to diversify your stock. 2. Gather data or access a graph. The most important macro indicators include GDP, Gross Domestic Product, CPI, Consumer Price Indices, PPI, Producer Price Indices, Unemployment Rate, Interest Rates, Fed Funds, Prime Rate, etc., Inflation Rate, and Balance of Trade. You can either download the historical data to Excel or access an interactive graph using online. 3. Observe and interpret the data. Look for the general direction that the numbers are moving in and any patterns that may emerge. Take into account the historical data you found, current data, and news. The website will have a separate series of data already converted to percent for either year-over-year or quarter-over-quarter. If not, you can determine the percentage of change for an indicator. For example, divide the nominal GDP, in numbers, of 1 year by the value from the previous year. This gives you the GDP growth percentage for year-over-year. 4. Pick your stocks. Investing in a broad-based stock or stock alternative might be the most convenient with this method of analysis. Select a group of stocks that reflect the movement of the broader economy and track an index like the Dow Jones Industrial Average or S&P 500. This approach allows you to enjoy the growth of stocks in the US in general without risking all your money on one or just a few stocks. Understand that macro analysis doesn't specifically help you decide which individual stocks to buy. Instead, it simply lets you understand the performance of the economy. For example, you may want to buy stocks when you think the economy will improve and sell when you think it will deteriorate. Give us a call +918 3910 94408. Register now www.stockbuysellsignal.com.